For decades, we've believed banks were the safest place for money. That's no longer true. With inflation high and interest rates low, your cash is losing value daily. Smart investors don't just save, they invest in real assets to build lasting wealth. In this video, we reveal 5 practical and accessible assets perfect for those in midlife planning for retirement. It's time to stop your money from shrinking and start making it grow for a secure future. 1. Rental real estate. In an economy marked by constant volatility and rising inflation, the search for safe, sustainable, and income-generating investments has become a top priority for many middle-aged Americans. At this stage of life, most of us begin to seriously consider long-term financial stability, risk reduction, and preparations for retirement. One of the most time-tested and effective assets in this journey is rental real estate. Unlike cash or savings accounts that are easily eroded by inflation, real estate is a tangible asset. It has physical value and typically appreciates over time. Historically, the U.S. housing market has shown steady long-term growth despite going through various economic downturns. This is especially true in areas with strong housing demand, such as Florida, Texas, or the Midwest, places where real estate prices remain relatively affordable while attracting new residents, creating solid rental demand. This steady demand is a key factor in generating consistent monthly cash flow for property owners. Beyond just value appreciation, rental real estate stands out because of the ability to leverage financing. With a relatively modest initial capital, investors can use a mortgage to acquire a property worth several times their own cash investment. As property values rise over time, the return on that investment grows significantly. Additionally, U.S. tax policy offers generous incentives for rental property owners. Expenses such as mortgage interest, maintenance, property taxes, and depreciation can often be deducted, helping to reduce costs and optimize after-tax returns, a major advantage compared to many other forms of investment. For those in midlife, establishing a stable source of income that doesn't rely on full-time work becomes a crucial goal. The passive income generated from rental properties offers significant flexibility. It allows you to avoid tapping into retirement accounts early or spending down your savings. Instead, you can enjoy a more stable, confident, and financially independent retirement without worrying too much about market fluctuations or job security. Real estate also carries the potential to become a legacy asset, something that generates income for future generations while continuing to grow in value. Another strong advantage for middle-aged investors is their often favorable credit history, steady income, and clearer long-term outlook. These factors make it easier to qualify for real estate loans and invest more effectively. And with the support of professional property management services, investors don't need to handle every little detail, from repairs to tenant communication. This significantly reduces the time and stress involved, making rental property a semi-passive investment that blends stability, growth, and low-maintenance ownership. In the journey toward financial freedom, especially at midlife, rental real estate is a practical, strategic solution. It's not just a safe haven for your wealth, it's a vehicle for long-term growth, dependable cash flow, and favorable tax treatment. In a time when leaving your money in the bank is no longer enough to keep up with inflation, owning one or more rental properties gives you control of your financial future and helps preserve what you've worked so hard to build. Instead of letting your money sleep in a savings account, put it to work for you, month after month, year after year, through real assets that create real, lasting value.
2. Dividend stocks. While many people are still struggling to find an investment that is both safe and consistently profitable, dividend-paying stocks have steadily proven themselves to be one of the most sustainable and practical financial assets, especially for those entering middle age. This isn't just a strategy for growing your wealth over time. It's a way to generate reliable, passive income, giving you more control over your finances, particularly in the years leading up to retirement. Unlike growth stocks, which rely solely on long-term price appreciation, dividend stocks represent shares of large, stable companies that have demonstrated strong performance over decades. Familiar names like Johnson & Johnson, Procter & Gamble, or trusted dividend ETFs such as VIG or SCHD are among the favorites of seasoned investors. What sets these companies apart is their ability to pay out dividends consistently, quarter after quarter, regardless of market volatility. That consistency is the core value of this asset class. The most compelling advantage of dividend stocks is their ability to combine growth with stability. While the share price can appreciate over time as the business grows, the dividends you receive provide a regular stream of income, much like a personal pension, but without depending on Social Security or shifting government policies. This matters even more once you hit your 50s, when the goal shifts from earning more to protecting and preserving your wealth safely and deliberately. Another powerful feature of dividend investing is the ability to reinvest those payouts automatically through dividend reinvestment plans, or DRIPs. These programs allow you to purchase more shares without adding any new money, amplifying your total investment and compounding your returns over time. For those still a few years away from retirement, this strategy can significantly boost your wealth without requiring constant oversight or additional capital. When it comes to flexibility, dividend stocks offer a unique advantage. If you want to use the passive income to cover living expenses, support your children, or simply enjoy life in retirement, dividends can serve as a reliable income stream. On the other hand, if you're still in the accumulation phase, reinvesting those dividends allows you to build a stronger portfolio for the future. One of the key benefits of investing in dividend stocks is that you don't have to pick individual companies, especially if that feels overwhelming or unfamiliar. ETFs like VIG, Vanguard Dividend Appreciation ETF, or SCHD, Schwab U.S. Dividend Equity ETF, offer diversified portfolios composed of carefully selected companies known for their consistent and growing dividend payouts. This approach reduces risk, saves time on research, and provides peace of mind for middle-aged investors who value simplicity, efficiency, and stability. In today's volatile financial markets, where inflation continues to chip away at the value of your cash, dividend-paying stocks offer both a safe haven and a stable income source. Unlike savings accounts that are subject to low interest rates or monetary policy shifts, dividends from solid companies often exceed the inflation rate, helping you preserve your purchasing power over the long term. In short, for middle-aged individuals pursuing true financial freedom, dividend-paying stocks are a smart, balanced solution, one that combines asset growth with dependable income. Whether you're still building your nest egg or preparing to retire, owning a portfolio of reliable dividend stocks or ETFs can give you the security, control, and long-term stability you need. In a world full of uncertainty, making smart asset choices today will bring you closer to the life you've always envisioned.
3. Index ETFs. In the pursuit of financial assets that can both protect and steadily grow wealth over time, index ETFs have emerged as an ideal solution, especially for middle-aged individuals who no longer have the time or desire to track the market daily, yet still want their investments to grow consistently. With their powerful advantages of diversification, low costs, and long-term effectiveness, indexed ETFs act as a smart, flexible bridge between financial stability and growth. Unlike investing in individual stocks, which requires time, expertise, and the ability to analyze markets, index ETFs simplify the entire process by allowing you to own a basket of stocks that represent the entire market. For example, ETFs that track the S&P 500 or NASDAQ 100 provide exposure to hundreds of top-performing companies. Popular funds like VOO, Vanguard S&P 500 ETF, SPY, SPDR S&P 500 ETF Trust, or QQQ, Invesco QQQ Trust, follow the performance of major market indices and have consistently demonstrated long-term growth through various economic cycles. One of the most compelling strengths of index ETFs is automatic diversification. When you invest in a fund like VOO, you're effectively investing in over 500 of America's leading companies, from Apple and Microsoft to Johnson & Johnson and other industry giants. This level of spread reduces the risk of any single company's volatility impacting your entire portfolio, and it brings a greater sense of stability to your investments. Another key reason index ETFs are so attractive, particularly for people in their 40s and 50s, is their extremely low cost. Unlike traditional mutual funds that often carry high management fees, index ETFs typically have expense ratios as low as 0.03% to 0.09% per year. That means you get to keep more of your returns instead of watching them get eaten away by unnecessary fees. More importantly, investing in index ETFs allows your wealth to grow alongside the U.S. economy, one of the most powerful and resilient in the world. Historically, indices like the S&P 500 have delivered average annual returns of around 8 to 10% over the long run. While short-term corrections and downturns are inevitable, the long-term trend has always been upward. That makes index ETFs a smart strategy for wealth accumulation, especially if your goal is retirement security or passing down assets to the next generation. Index ETFs also offer liquidity and flexibility just like individual stocks. You can buy or sell them throughout the day at current market prices, unlike mutual funds which only trade at the end of the trading day. This gives you greater control and the ability to react quickly to changes without getting bogged down in paperwork or rigid trading rules. For middle-aged individuals juggling careers, family responsibilities, and planning for the future, the idea of spending hours monitoring the market is simply unrealistic. Index ETFs solve that problem beautifully. You don't need to be a financial expert or stare at charts all day. Just choose a solid fund, commit to a long-term strategy, and let the market do the heavy lifting. In today's inflationary environment, where rising prices are quietly eroding your purchasing power, leaving your money in a savings account is no longer a viable solution. Instead, consistently investing in index ETFs like VOO, SPY, or QQQ is a smarter way to protect your wealth while ensuring it continues to grow. These ETFs represent real value, not in physical form, but in the confidence investors have in the strength of the U.S. economy, captured in world-class funds that have earned the trust of the global financial community for decades. If you're looking for an investment vehicle that's safe, simple, and effective over the long term, with minimal effort required, index ETFs deserve a place in your portfolio. With their low costs, reliable growth, and high flexibility, they offer a realistic path toward true financial freedom without the stress, time commitment, or excessive risk.
4. Gold and precious metals. In a volatile financial world where inflation, banking crises, and economic downturns can strike without warning, owning a portion of your wealth in gold and other precious metals isn't just a smart strategy. It's a time-tested form of protection. For middle-aged individuals seeking financial security and long-term stability, this asset class deserves a permanent spot in a resilient portfolio. Gold, along with silver and other precious metals, has served as a store of value for centuries. It has weathered wars, financial collapses, and the fall of countless paper currencies. Unlike fiat money, which can be printed endlessly and steadily lose value over time, gold is finite. It cannot be manufactured with a keystroke, and that's precisely why it's seen as a safe haven whenever the market enters crisis mode. One of gold's most powerful advantages is that it operates independently of the modern financial system. When central banks change course, interest rates fluctuate wildly, or stock markets tumble, gold's value tends to hold steady, or even climb. That makes it a potent hedge against inflation, a growing concern for many Americans heading into retirement. And you don't need to store gold bars in a safe to benefit from it. Through ETFs like GLD, SPDR Gold Trust, or SLV, iShares Silver Trust,
You can invest in gold or silver with the convenience of a brokerage account. These ETFs offer exposure to precious metals without the hassle of physical storage and can be traded throughout the day just like any stock. It's the best of both worlds, the safety of gold with the liquidity of modern markets. Gold tends to shine brightest during turbulent times, pandemics, wars, and global recessions. That's because investors instinctively move toward defensive assets when uncertainty looms. The instinct to own gold for peace of mind is as old as investing itself. That's why many financial experts recommend allocating 5 to 10% of your portfolio to precious metals, not for aggressive growth, but as a buffer against the unexpected. Silver also plays an important role. It's a store of value, like gold, but it also has significant industrial uses in technology, medicine, and renewable energy. Silver prices can be more volatile, but that also means greater upside potential during bull markets for metals. What matters most is this: investing in gold isn't about getting rich overnight. It's about preserving your purchasing power, especially in the long run. When you retire and no longer have active income, your priority shifts from chasing returns to ensuring your savings don't quietly erode over time. Gold helps you do that silently but reliably. Whether you invest in physical gold or through ETFs like GLD and SLV, precious metals play a foundational role in any long-term financial plan. For middle-aged investors on the road to true financial independence, gold isn't just symbolic, it's a lifeline, a way to weather the storm, protect what you've built, and move into the future with confidence and peace of mind.
5. Invisible assets, skills, and knowledge. While many people chase after tangible assets like real estate or gold to protect their money, there's one type of asset that often gets overlooked despite offering superior, lifelong returns: invisible assets, your skills and knowledge. At middle age, when most people start thinking about stability and preparing for retirement, investing in yourself through learning and professional development may be the lowest risk, highest return investment you'll ever make. Unlike houses or stocks, which fluctuate with the market, skills and knowledge don't lose value, aren't affected by inflation, and, most importantly, can't be taxed. Imagine owning a skill that consistently generates income, understanding how to invest, using AI tools effectively, or mastering digital marketing. These abilities not only boost your current income, but also unlock new career paths, even at an age where many feel they're becoming less competitive. In today's rapidly advancing digital economy, skills are the most powerful currency you can hold. One of the greatest strengths of intangible assets is their flexibility and scalability. Let's say you complete a course on financial investing. You can manage your own portfolio better, advise friends and family, launch a consulting side gig, or even build a blog that generates passive income. Or perhaps you master AI tools. You can apply them to your current job, increase productivity, or start a new business entirely. These are real-world applications with real financial impact. And here's the good news: you don't need to return to college or spend tens of thousands of dollars on a new degree. Today, high-quality education is more accessible than ever, with affordable online courses from platforms like Coursera, Udemy, and edX. Certifications like CFA, Chartered Financial Analyst, Google Ads, or PMP, Project Management Professional, are in high demand among employers and individual investors alike. These are invisible assets that create visible opportunities. The most powerful part of investing in knowledge is its unlimited potential to grow and compound over time. Once you understand how to analyze markets, leverage new technology, or build a personal brand, you'll not only earn more today,
you'll be equipped to thrive through whatever the future brings. In a world where automation and AI are replacing manual jobs, middle-aged professionals must adapt or risk falling behind. And adaptation starts with mastering the one thing machines can't replicate: critical thinking, data analysis, effective communication, and deep market insight. These are human strengths. These are your most irreplaceable, most valuable assets. If you're truly serious about achieving lasting financial freedom, don't just invest in things you can touch. Invest in yourself. Skills and knowledge are the only assets that never depreciate, never wear out, and actually become more valuable the more you use them. They're the foundation of confidence, adaptability, and real control over your future. Parking your money in a savings account might feel safe, but in reality, that's just a temporary resting place. If your goal is to protect your purchasing power and unlock true financial freedom, you need to move towards assets that generate cash flow, grow over time, and can withstand economic storms. Rental properties, dividend-paying stocks, index ETFs, gold, and most of all, your own skill set. These are the pillars that not only preserve wealth, but help it grow sustainably. Start investing in your future today by choosing an asset from our list. To protect what you built, don't miss our next video. If this was helpful, please like, share, and subscribe to continue your journey toward true financial freedom with practical strategies designed for you.